Let's start with this survey of the hedge fund professionals. We could put up a bar chart from the Bloomberg story actually showing, boy, they're expecting some really big, hefty raises here.
Absolutely. Well, and we knew last night that this was going to be the most read story of the book. I mean, you put bonus and hedge fund in a headline. I mean, it's not even fair. But yeah, actually some interesting numbers here. You know, hedge fund managers, we have talked so much this year about, you know, long live hedge funds, the death of hedge funds, you know, long live the king is dead. We've talked about people going out of business, and yet here is this survey saying hedge fund managers expect, on average, 39% bonus bump.
That doesn't mean they're going to get it.
Doesn't mean they're going to get it, but, you know, one of the things that's interesting here, and the bar chart actually breaks this down nicely, is the difference between hedge funds and private equity, which often get conflated in Washington and elsewhere. And one of the people we talked to in the story notes that hedge fund people usually get their bonuses. And this is against the backdrop of hedge funds having a pretty crummy year.
Well, but this is amazing.
You're incensed. I get it.
This is amazing to me because private equity has seen a huge flood of cash. A lot of people want to go into private equity. They frankly have had really good returns.
Right.
If you look over the past decade. Hedge funds are trying to stave off this wave of outflows, and I'm struck by what some of the professionals said in this recent story we did, including Mark Lazary of Avenue Capital, saying, in some ways, the hedge fund industry killed itself with the high fees in a low-yield, low-return environment.
And that's what I wonder, Jason, are these two things directly linked? I mean, if you're an investor giving into a hedge fund, do you want to look up and see the bonuses went up by 40% when you're worried about the fees already?
Absolutely. I mean, it's a staggering element of all this. You're exactly right. Because when you look at the way the S&P has been going, and all we have to do is listen to, you know, what's coming out of Washington, we're reminded every day of the new record highs that the Dow is setting, the S&P is setting, the NASDAQ is setting, and yet hedge funds are meant to make you outsized returns. They are trailing the S&P on average, and yet there's a lot of money going to these managers.
So is this music to the ears of the passive guys? I mean, the people who have the big passive funds saying, that's great, hedge funds. You go take a lot more money in bonuses because it's going to speed your demise.
If you're playing a long game, yes, but probably if you're a passive guy looking at this morning, you're thinking, this is insane. This is crazy talk. What's happening here? But you're right. Maybe when you go on the road next year to make your pitch, you're sort of waving this around.